Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. Hey, before you go, make sure you guys hit that subscribe button, and right next to it's a little bell to let you know when I come in unannounced. Because if you're watching this at my regular station time or regularly scheduled time, you're going to be missing out because I'm popping in here to talk about pre-market open and what I like to do sometimes when I'm looking at the markets. I do actually implement or put on trades or try to implement trades before the open to get hit on maybe one of those pops. So we'll talk about that here in a minute. First, I want to talk about a couple of things across the pond. We got yesterday, late in the day, we got our crude oil inventories. It was a build of 4.3 million barrels, expected to be a build of only 2 million. Now, remember, we've been talking about this. I don't see the demand coming right now. And keep in mind, there are refineries that are shut down right now. There's some union walkouts and stuff like that. So that is crimping some of the production of crude oil into the refined products. But at the end of the day, we're still not seeing that demand, seeing these crude oils build and not getting moved into the other little buckets like we talk about with distillates, airplane fuel, and gasoline for our cars. The distillates is going to be really the driver of demand because that's what goes into the manufacturing process, folks. All right, so other economic data, we got the retail sales coming out of Japan, much better than expected at negative 0.6%, expected to be negative 2.2%. So that's pretty good. And then moving over here to the United States, we got GDP, gross domestic product, coming in at 2%, expected to be 2.6%. Well, if we're thinking about inflation there, it's really not showing up in this data point. But advanced GDP prices is a little bit higher than expected at 5.7%, but was expected to be elevated at 5.3%. And finally, we've got the unemployment claims better than expected at 281,000. Something else to talk about, folks, is the infrastructure spending bill trying to get through today before Biden goes to the G7 summit, I think it is. Anyway, wants to get this passed. Looks like it might get through. It's a $2 trillion spending bill. One of the things we're noticing here, folks, is if you've talked to any small business or any corporation, they can't hire right now, despite the fact that they're trying to increase wages. Now, we will see wage increase throughout all this, trying to get folks back working and off of some of the extended benefits there. I think that's really what's causing the workforce or the labor force to come really back gangbusters. And that is going to be something the government is going to see as a headwind. Finding these workers to actually come in and do the job is going to be a little bit more difficult than they think. They're going to really have to compete with the private sector now. And if they think that they're going to get GCs off of these jobs that they're already doing, I don't think that's going to happen. Why? Because they are so friggin' busy right now with expansion, housing building, the folks coming out of different states and the urban sprawl, if you will. A lot of those things really driving the market. Something later to keep in mind, pending home sales. We got the existing home sales better than expected. Let's see how the pending home sales does later on today. That will be something that we're going to be keeping an eye on. I think those numbers are going to be pretty good as folks are getting off their rockers and getting out there, buying the home and or refinancing, because right now we're looking at interest rates rising. That's all across the news, and I think people are trying to get in on that. And as you can see right here, we got those bonds moving higher, which means those interest rates are going down. So if you're looking at refinancing, this would be an opportune time, because I don't think they're going to go a whole lot lower. I don't think they're going to go a whole lot faster real fast, quickly. But I do think that the risk for your interest rates is going to be towards the upside if you're trying to refinance, that is. All right, gold moving back higher again today. I guess that inflation trade is back on, even with Bitcoin moving to the upside. Now we're seeing the VIX come off a little bit. Despite yesterday, we got some volatility spiking on this rally. But I'm still looking at these chart patterns. We can see when we get these topping patterns and then a blast off, a topping pattern, maybe another blast off, it's really getting a little bit long in the tooth, if you ask me, and there is an imminent correction happening. Now, is it going to be like one of these big 10% corrections? No, I don't think so. But I think that we will definitely see a pretty decent correction, maybe back down to these trend channels. Definitely the point of control where the volume has been building up has incrementally moved higher here, which is acceptance of value at higher levels. But I just don't think that there's a whole lot behind it because of the economy is still a little bit in flux. Yes, we are seeing better than expected earnings, and folks are getting beat up for it. So that's also another sign that we could be getting a little long in the tooth there. Now, if I'm looking at the Dow Jones Industrial Average yesterday, we got that confirmation. I think it's going to be more of a follow through, and I would lean towards the strength in the Dow as opposed to, say, some of these technology companies, because those tech companies have had the big moves to the upside while leaving the Dow Jones really in the dust. And I think that there's some value there that might be able to hold on to some of this index. E-mini S&Ps yesterday, topping pattern again. I think we are looking to come down and correct. I don't think we're going to see another test of this neckline or any of that, but I do think we will retest this 161 Fibonacci, which is lining up with that 50-day simple moving average there, folks. So risk to the downside, I would say, in E-mini S&Ps and in the NASDAQ. I would hold on to my Dow Jones. For crude oil, risk, I would say, is to the downside in crude oil, but I'm not going to really be playing that. I've got the pop or drop scenario based on all of these conflicting types of sources of information we get. Some folks are saying crude oil go to 100, and I don't really believe that. I think it's going to roll back down towards the 70s. But having said that, the market will beat you up as often as it can. It tries to inflict the most pain as possible, and that's why I wanted to play the pop or the drop in the crude oil trade with ConocoPhillips. But let's talk about Kroger. You guys, I talked about this long call strategy. I got long the 40 calls in there, went up, tested it. That's one of my rules to get out of it. I thought we were going to pop up and get into that 40 handle and hold on to it. Well, it's starting to look like we're breaking down in this type of chart pattern after, Tuesday. Confirmation to the downside. I was hoping that we would erase that yesterday and at least get some momentum back to the near open, and that did not happen. As a matter of fact, we closed near the lows there. So I'm going to hold on to this because I am still bullish in it. We got this with really low implied volatility. The volatility has expanded for me. That helps me out, despite the fact that we're getting this bit of a correction here. So that we've got two counter opposing forces. My bad directional move here in Kroger, but because I set this up according to those guidelines that I talked about with really low implied volatility and the expectation we would see that volatility expand heading into this earnings, or even the sometimes dividends will get a little bit of a spike there in some volatility. All of those things are what I'm looking for in this trade. Volatility expansion. Now, I would like my bullish assumption to be coming true, but nice to know that when we're setting these up according to these guidelines, we can get some levers and pulleys working in our favor, despite the fact that our brain is calling the right directional moves. So I am looking to get out of this, but I'm going to hold on to it a little bit longer. I don't have any working orders in here. If we break below this 50 Fibonacci here, I'm going to pull the ripcord on it. And something to note I wanted to talk about yesterday, I did go back to my old charts and found that I had put a Fibonacci on this spike. And the reason why I did that, folks, is because there's a lot of theory out there, and it holds true. I've seen it crazier things happen than this. When the market prints up, even if it's on a fat finger, the market wants to revisit those prices. So when I put this on there, it's because of that revisiting aspect. It may have seemed really out of character or out of whack at that time, but the market wants to produce that. As a matter of fact, this isn't the trade, but something to note, this is how long we have been at zero interest rates. Basically, that is equivalent to a 0.25 Fed funds rate, which is where we are. And this is probably 10 years old, folks. At least, yeah, it's probably back to 2011 at least. Anyway, having said that, I do think that the prices want to revisit, but that's why I put that Fibonacci up there. And you can see that that 78 Fibonacci line was what was lining up with that $40 that I was talking about so much yesterday, and my charts weren't showing it. But that's, in fact, what I had done. I went back to those old charts and found that I put the mark on the top of that spike there. So I just wanted to talk about that a little bit. You can see it found that resistance there at that 40 level, started to peel back, but I'm going to hold on to it a little bit longer. I am kicking myself because I probably should have covered that on the first one. If you are, like I say in these videos, if you are a newer trader to options or you have a low risk tolerance, that would have been the time to cover those. I was trying to squeeze it out a little bit more. Now, Las Vegas Sands, I'm prepping for the open here with this trade. You guys remember I talked about this. We were I was selling some puts in here at around the 39 level. I sold the 39 puts in there. Those expired. I got put that stock. All right. So I'm long at 39. I collected about 40 cents for it. At the end of the day, I'm looking at that money that I collected for those original puts as the paying for my exercise fees, which I don't suggest doing, but I wanted to go through it for the process of just being long at 39 as if we went through this process. All right. So that said, I am long Las Vegas Sands here at 39. I'm looking to cover some of them because I'm pretty overweight in the casino sector. You guys know I'm long pin as well. So I want to cover about half my position in this Las Vegas Sands. So I'm looking to get out of half my position at 41.61. I've got a working order in there right now. It's a GTC. So I'm looking to get out of half of my trade at that level. And if you guys remember when we were putting on this trade, we were talking about these two gaps right here, this gap here to here and this gap here to here, right? Market wants to revisit those levels when they haven't traded and we've gapped in some sense. Well, I think that we're going to cover this gap. If we do, that's $41.77 ish. I'm just below that because I want to get clipped as it tries to cover that gap. So I'm trying to get out at 41.61, just slightly shy of that. The other thing I'm looking to do is I'm working some orders to cover calls. All right. So I've covered half my position at that point. If I can get up to that 41.61. Right now, I'm looking at the November 45 calls in there. They're priced, they settled right around 40 cents. I'm looking at the delta. If I get a dollar move higher from where we currently are, which is the overnight is trading right here at around $40.50. $1 move higher, I know that delta adjusts my premiums. Okay. So on those 45 calls that look like they're settled 40, it's an 18 delta, folks. So if a dollar move higher, I get clipped on my half of my trade, right? I will probably get clipped at the same time on my covered call that I'm working, all right? Working to cover half of the remaining that I have in Las Vegas Sands, all right? 50% will get out at that 41.61. And then I'm trying to cover the remaining 50% with covered calls. And I'm looking to sell those 45 calls at 61 cents. All right. So that's at 18 cents. I'd be right around mid-market on, speculation. If I get volatility expanding a little bit, I'll probably get hit a little bit sooner on those. But again, not over covering my entire position on this. And I wanted to put that in before the open for you folks so that we can talk about this. Sometimes we need to put those trades in before. This is one of those things that I'm going to be looking to do. And later on this afternoon, we're going to be talking about another trade that we can implement around the straddle, how you do that. When is the best time for something like that? All right, I'll go into those devil of the details in that video. So please check that out. Go to protraderstrategies.com. Before you go, though, smash that like button, feed those bots, send it out there and find somebody like you. Comment if you guys want me to cover anything. Make sure you throw it over there in that section. I'll come back around and make sure everybody's clear of concept. And don't forget to subscribe and hit that bell so you get notifications when I pop in here unannounced. All right, that's it, folks. If you can't take that, take it easy. Good trading.